expect from the local market here at home. Chris Weston from IG in Melbourne joins us this morning. Chris, good morning to you. We did see US stocks breaking that recent rally overnight with a bit of a late session sell-off. We did have that poor economic data, but the losses really seem to accelerate after comments from San Francisco President John Williams about the Fed winding back QE3 as early as this US summer. Just how much significance did you place on those comments?
Well, the market seemed to put a lot of significance on them, to be honest, Liz. I mean, we did see the S&P, as you say, tail off. We saw the dollar strengthen a little bit. I think what we've got to remember here is that John Williams we've got to look at his positioning in terms of what his recent rhetoric has been. He is probably centre-left, i.e. he is still in the dovish camp, but he's probably more towards the centre. So I think, you're always going to look at whether a dove says something hawkish or a hawkish member says something dovish. His comments today, I think, have been taken a little bit out of context. And I think the other thing we need to remember is the guy's not a voting member until 2015. So we'll always look at the core first. We'll look at what the other voting members say. Then we'll look at what the other members of the Fed who aren't voters have to say. And that's what John Williams is. So we will still look at his comments, but perhaps not give them the same sort of credentials as someone like Ben Bernanke or Janet Yellen by any means at all. Now, I think that the headline which has gone through the systems is that the Fed may taper back or curb the pace of their asset purchase program by the summer, probably towards the sort of August period, and then may actually end up finishing by the end of the year. Now, these comments, I think, are a little bit misleading. If you actually read into his statement, remember that the Fed have got this substantial improvement test that they've got at the moment. Now, he has very strong economic projections, and he believes if his economic projections are met, then the Fed could look to taper off by those dates that I've specified. However, he doesn't believe, as things stand, if you actually drill down, he doesn't actually believe that, as things stand, that we are actually meeting that substantial test at the moment. If you look at the April and March data in terms of the non-farm payrolls, that's averaging 150,000. That's below what he considers to be meeting the Fed's target. So if his economic projections are met, then he could advocate that the Fed may look to start tapering off. Unfortunately, the actual numbers that we're seeing at the moment aren't meeting his target. So it's kind of a similar situation with Bernanke and Yellen, who would probably be sitting in the same camp. If the data starts to really, really improve, then the Fed will look to taper off. So I haven't learned anything new from these comments whatsoever. The market did react, but considering he's not a voter, I don't actually put a huge amount of credence on these comments at all.
What about Ben Bernanke, though? We've got him speaking next week, updating Congress on the central bank's economic outlook. Are we likely to get any indication from him on exactly how and perhaps when exactly the central bank would begin winding down its bond buying program?
Yeah, the 22nd's the one that you want to look there. I think he's speaking tonight, actually, but I think the one on the 22nd is the key date, because he'll be talking about the economic situation. Now, we've had, last night, obviously, headlines are coming from John Williams, but we also had some of the Uber hawks coming through. Richard Fisher spoke again. He's been speaking quite a lot recently. We talked about tapering off sooner rather than later, especially on the mortgage-backed security program. You've had Jeffrey Lacker as well, some of the comments coming through there, and obviously Charles Plosser. So some of the hawks have come out, and they've given the dollar a bit of strength of late. Now, there's been other factors behind the dollar move. Perhaps, the improving US deficit situation is clearly a major concern. There's a major improvement and a box-ticking situation there. But if you look at the inflation numbers coming out of the US, and we saw headline inflation last night coming out at 1.1%. If you extrapolate the food numbers, then that coming out at 1.7%, which is a tick down from where we were. And the Fed look at core PCE. Now, core PCE on a quarterly basis, which was measuring the first quarter, which doesn't include these big declines we've seen in commodity prices, was at 1.1, 1.2%. So that was still significantly below where the Fed want core PCE to be. That's one of their substantial improvement metrics they look at. So if you include the big declines we've seen in gold, iron ore, some of the other energy prices we've been seeing, US gasoline coming off quite sharply as well, there's no reason why the Fed would be looking to curb its asset purchase program anytime soon, because inflation is quite weak. And if you look at inflation expectations, they're still very, very low. So, for me, I think he's going to put the market back in check, and that could be a dollar negative event going into that situation, as the reality is that the Fed will probably keep their foot on the pedal for the rest of the year, in my mind. So forget about, the pace of asset purchase being reduced in the June meeting. That's not going to happen. They're going to keep the status quo for as long as possible. And we know that Ben Bernanke is going to hand over the reins at the beginning of next year, probably to Janet Yellen, and he doesn't want his legacy to remember as the guy who removed stimulus too early.
That's a good point. All right, let's just focus a bit more on our local market here today. Despite that negative lead from Wall Street, we did see oil and some of the base metals do reasonably well overnight. How's that all likely to impact our market today?
Well, I mean, we're calling the market pretty flat and probably up about 4 points. If that happens, we're going to be down around 30 odd points for the week. So a bit of a negative week thus far. But yeah, looking at the sector leads from Wall Street, it was really about tech last night. Tech was up about 1%. We don't have that similar sort of lead in today. Every other sector was down. Material was probably the best or the second best performing, and that was still down about 0.3%. If you look at BHP's ADR, we're actually the market's expecting that to open up about just over 1%. It's really interesting because, you know, the iron ore prices were down about 1.1% in overnight trade. You have copper up at probably a couple of cents or so from yesterday's close. The gold price is down about $8 from yesterday's close. So you're probably going to see a little bit of weakness in some of the gold plays as well. And we've got confirmation now that John Paulson has reduced some of his gold holdings, which we'd probably expected to see for some time. Credit Suisse coming out of a note as well, saying that they reckon the gold price is headed down to $1,100 per troy ounce on a 12-month basis, which I think is pretty interesting as well. But BHP's ADR is up about 1.1%, so that's going to be a positive day by the looks of things. Newcrest ADR is down about 4 cents, so it's probably going to be a bit of a mixed picture. No real rhyme or reason behind that as well, and of course it's going to be down to the banks today and see how they perform. The Japanese market will probably be down about 0.5%. We're looking for that to come under a bit of weakness today. So we might see Asian markets under a bit of pressure, although, you know, it's going to be interesting to see what happens in China, because that market was on fire yesterday around some of the situations with some ease of regulations within the property space as well. So, yeah, perhaps another strong day in China could support, but as things stand, it looks like materials, at least BHP anyway, may support our market today.
All right, Chris Weston from IG, always great to get your thoughts. Talk to you again soon.
Thanks, Liz.
Let's take a look at yesterday's session in a bit more detail now. Here's Ingrid Willich.